Welcome to Link Up Leaders, your link to all things in supply chain and e-commerce. We are joined today by none other than Chris Shipferling of Global Wired Advisors. Did I pronounce your last name right?
You nailed it. Honestly,
Okay.
you can pronounce it any way you want, man.
Good stuff. Yeah, no, I mean, we've had some awesome conversations in the past few days.
Yeah.
Conversations where it's just, I think we've had like 10, 15-minute or maybe even 30-minute meetings planned. Just goes to almost an hour just through talking about this.
That's right.
Which is why I'm so excited to talk about this topic. And I know you come from a very unique background.
Yeah.
When it comes to, unique to some, not to most that are already in sort of the product and physical goods space,
That's right.
I would say. So if you wouldn't mind telling us a little bit about your background and sort of how you got to, where you are today. Obviously, you're in a great position.
Yeah, absolutely. And thanks for having me on, man. I really appreciate it. So I started my career coming out of college, not really knowing what to do. And I joined this Japanese stroller company. And, they sold strollers and a few car seats, but mainly it was just strollers. And, it was a publicly traded company on the Nikkei. But here in the United States was their subsidiary, and it was very small. And so I was part of a team that was being built to really grow the business. And so coming into that completely eyes wide open, I was able to really learn very quickly what it means to work within a small business and work with a fully functional team, all functions. You had customer service, you had sales function, you had marketing, you had operations, et cetera, et cetera.
You're a jack of all trades.
Yeah, well, you want to talk about jack of all trades. We would go out into the warehouse at the end of the month, and actually all of us, all hands on deck, shipping product to try and hit our number every single month. So there were sometimes we would spend all the way till 3-4 in the morning, just trying to ship out goods, either end of year or end of month. So yeah, I learned a ton very quickly on what it's like to work within an organization that's focused on consumer products. And we sold to very large retailers. We sold to Target, we sold to Walmart, we sold we sold to AFES and Nexcom and Babies R Us, and God bless their soul, even though they're still around overseas.
Are they?
They are, yeah. Singapore, I think, is still thriving, and there's a couple other countries where the Toys R Us, Babies R Us brand name, is still doing well. But learned a ton, and then from there, I went to work with it was more of a middle market enterprise level company called Evenflow. And, while I was at Evenflow, I worked under some just unbelievably talented people, beside and also for, my CEO at the time, when I came in and I interviewed, this guy that I'm sitting across from at a desk turned around Dove, Atari, Ben & Jerry's, some very, very large brands. Yeah. And after Evenflow, he went to go work for Devonshire, which is I believe it's the private equity arm of Fidelity. And so, and he was charged to run the whole stinking thing. So very smart people. It was a private equity owned, it was a portfolio company of Weston Presidio. And so I got a lot of exposure to working in, just a larger organization, as well as more of a high pressure organization around the fact that we were PE owned. And we sell now a lot of businesses to private equity, and I understand very clearly the expectations of private equity. So it was up in Dayton, Ohio, so we were really close to Procter & Gamble, and we had just a ton of P&G folks that I worked alongside. Folks that went on after Evenflow to go become executives at Mars and Hershey. And then one guy I worked very, very closely with, he is about to take over the reins at Airstream. So just really, really smart people that understood consumer products, but in a much more, I call it, sophisticated, complex manner. And so then from there, I was recruited to go work for a company called Jean A. They were a Barcelona-based business. It was a family-owned company of around 100 or 120 million. Strollers still in the juvenile product space, and they were more premium, so they tasked me to really start and make their North American effort successful. So I was an executive general manager of all of North America. So that actually gave me my first taste of feeling entrepreneurial, right? I was given a very large landmass. I was given, probably one of the, it is the best economy in the world, and was told, hey, go after it. Let's establish it, start it, from soup to nuts. And so, and given a nice, the difference was, I guess it really wasn't a difference. It's almost like anybody listening who started their business and raised money, right? I was given a really nice budget to really go after it. And I was given a lot of already established resources, but there was a lot of work and a lot of wood to chop around making sure that the product that they were offering here in the United States actually fit the United States consumer, right? So really just another click of just learning and being kind of immersed, and you and I have had great conversations. So I want to go back to Combi for a second, because when I was there, I spent a lot of time in Asia. I spent a lot of time with the factories, and I understood the importance of building that relationship with my factory, spending time with them, going out to dinners and going to the KTVs and all kinds of nonsense, but and golfing on the weekends and et cetera. I mean, I understood and learned, and really I had a great mentor while it was our CEO. I had a great mentor while I was at Combi, who really taught me the importance of those factory relationships, in a consumer product goods setting. So, yeah. Oh, go ahead. Sorry.
And sorry to cut you off, but with the relationships that you had, what did those meetings really consist of? Because I think this is a whole different dynamic that e-commerce specific, or we could say Amazon sellers, online retailers, but a lot of them that are just starting out only know maybe what they see in a course or what they see on YouTube for relationships. But what were your relationships with the factories?
Yeah, we would have a team that would fly over, while we were. So typically, the reason why we go about twice a year, and the reason why we would go is to finalize all the NPD, or the new product development plans, and then specifically we would talk about the channels in which we were selling, and the feedback that we were getting from the line reviews that we would attend. So, for instance, we'd go to Babies R Us up in Wayne, New Jersey. One Jeffrey Way. It's ingrained in my brain. And we would sit in front of a buying team, and we would present all of the different products that we believe were a good fit going forward. So, if this was 2006, we're thinking about 2007, right? And so kind of walking through what we believe would be the best products on shelf, and the best features, and the best whatever, right? And then we would take that feedback, and typically that's when we would go visit the factory, and we would sit down with the factory owner, and we would walk his team through the changes that needed to be made. We walked them through, what we believe was really strong innovation, and frankly speaking, it was objective, but it was a lot of subjectivity. And what I mean by that is you're really trying to sell the factory owner and get him on your team, and get him behind the effort that you're trying to make, when it comes to the product on a specific shelf. So it's more than just saying things like, hey, Babies R Us really wants these 3 strollers, and it's going to produce, 300,000 units for you. It was, really walking him through why he should buy into the company, not just the individual products. And it worked over time. We saw it. This particular factory owner, I mean, gosh, just this particular person, we called him Lexus because he owned a Lexus, and that's what he wanted to be called. He owned a Lexus and said, call me Lexus. And so, Lexus in particular, I would say at the time, and now it's even more compounded. He owned just, a ton of real estate outside of Shanghai, and he was a very, very, very wealthy man. And so you really had to figure out what really drove him, what motivated him to get behind your company. And I got to say, my CEO at the time, who's still, I keep in touch with him, and I'll get to that in a minute. He actually became a client of ours later on in life at Global Wired. He did a really, really, really good job of getting this factory owner very excited and motivated to want to create lots of great product, for our team. So, and we spent a lot of time with him. I've been to the Shanghai. I don't even know if it's called the Shanghai Country Club. I think that's what it was called. Going out there and golfing and putting up with the fact that, he kind of pulled a North Korean dictator at some points where he said, "Oh yeah, that's a 2 or a 3." He clearly shot a 5 or a 6. But nonetheless, the point is, get to know your factory owners. I think you and I have had a lot of conversation around this, and I think it's really important. When you're listening to a course and you're really getting started and you're constrained on financial resources. I completely understand. Of course, you're constrained when it comes to COVID. But the minute you start really producing any level of income in your business, please budget to go to China. I'm just telling you, it is absolutely 110% worth it. And by the way, I've been sending your platform around to friends. Super impressed with your platform, and the demo that you took me through. But I think you would even advocate that
100%,
through your platform, let's say you meet 2 or 3 suppliers and you develop a good relationship with them, buy a plane ticket, just spend
100%.
$2,000, to fly over there, spend, a week or 2 weeks getting to know your suppliers. Every single one of our clients that we've taken on, where we've seen some like genuine massive success within their business, there is a true correlation to where they've told us, yes, we know our suppliers. We've been to Asia. We spent 2 or 3 weeks, already. We're planning to go back, et cetera, et cetera, et cetera. So, yeah.
Yeah. No, I was just going to mention what I didn't hear is I didn't hear you negotiated on price when you met with them, that you negotiated on MOQ, that you negotiated on who's going to take care of the molds and all of that, which is interesting. I feel like a lot of conversations that we've had with our factories is they feel that it's become very transactional. It's become this is what I need. If you can't produce it, I'm moving on elsewhere. Not, hey, can we work together on this? What's your name? Who are your kids? Can I get to know them? Can I send you a gift? Can, we just hop on a call? Like a friend almost, a partner. It sounded like you were pitching an investor almost.
No, it's true. And I mean, those conversations always came up, but they weren't front and center, to your point. The factories we worked with, we were very fortunate to have them pay for tooling, and we would they would amort the costs in the COGS. But that only came from a strong relationship, like being able to for the factory owner to take a chance on you and your business only came through building a really strong relationship. And so you're right, negotiating price, negotiating, talking through all the changes that have to be made, et cetera. All those conversations at some points they got tumultuous, but they didn't, but they never got to a place where it was a done deal for the factory, because you had that base of relationship. You had that base of, hey, I trust this guy because he came to me 5 years ago and said, this is what we're going to do. And he executed. He actually fulfilled every single thing he said he was going to do. And so, and even if that doesn't occur, to your point, man, and you're exploiting something I think that's extremely important, build the stinking relationship. Build it. I mean, there's zero harm. And I think a lot of folks come into it because they haven't had the skill set. They haven't had the backgrounds to go, that worked in Asia, that worked in any type of factory, even if you're domestically producing your goods, that that gave them the experience to understand to even do something as simple as just let's build the relationship. And I think a lot of folks, unfortunately, in this space, from what we've seen, this isn't just an assumption, kind of take an approach of, well, they're the ones making the product for me. You're working for me. Therefore, you need to do X, Y, and Z. And it's just like, yeah, no, I don't think so. We get that on the global side. We get folks who will come to us and say, hey, you're working for me. I'm not working for you. And I'm like, yeah, see, now you're not a client. You're not going to be a client. That's not how any of this works. So anyway.
It's a two-way road. I mean, you could get fired and you can fire. That's what a relationship is. You're not happy in a relationship, you leave, you walk away, you find someone better, right?
It really is truly that stinking simple. So yeah, I mean, just to round out the kind of career in the background, while I was at Jeannet, that's when I realized I needed to pursue digital activity. And, I put my head down, I learned Seller Central. I had about $500,000 worth of inventory sitting in a warehouse. And I just needed to get rid of it. And so one of the ways I pursued at the time was Seller Central. This was back in 2015. But there's no executive course at Cornell to teach you Seller Central. You got to just go through the school of hard knocks. And so really put my head down, learned the platform, learned it from literal soup to nuts. How do I take my product, I optimize it through a listing, through keywords, and then how do I advertise that particular product to a consumer? And then how do I also run and maintain the operational side, right? How do I send product so it can be fulfilled by Amazon? All of those things I learned, and it was fantastic. I really pivoted over to digital marketing and learning those functions. And instead of starting an agency, I started a consultancy where I really went into enterprise level clients, and even small to medium sized business owners, and I just help them formulate digital strategy. You're here, here's how to get to here. And, I really was working with business owners, both very small and also very, very large. In one, for instance, I was working with a subsidiary of Kimberly Clark. And I give that example to say, even working with those types of folks, it was very evident that they had no idea what they were doing from a digital perspective. And
when you say digital, do you just mean Amazon, or is that all digital?
I mean direct to consumer. I mean, even let's just say you continue your wholesale and B2B relationships with all the different big box retailers. It's about having that handshake with the consumer. And that's really what predicated all of this, because I was so stinking tired of walking into Bed Bath & Beyond or a Target or a Walmart, and I was given a lot of opinion and how the buyer felt, and there wasn't a whole lot of data that was really driving the conversation. And so at that point, I said, it's time. It's time to have a conversation directly with the consumer. So yeah, that's really where I pivoted myself into digital. And then, of course, I met up, fast forwarding and giving you the Reader's Digest version. I, met up with my three partners who we all work together now at Global Wired Advisors. And, they all came from the institutional investment banks. And we said, hey, strong financial engineering, strong consumer products. Let's have a focus. Let's start an investment bank with a focus on digital consumer, and really go after a market that we had two theses. What's the plural?
Theses, I would say, right?
Yeah, I think that's
because theses sounds weird. So it would be theses. It would have to be theses.
It's like mouseses.
Yeah.
We'll just say it like George Bush, man, and then everything just makes sense.
There we go. Say it with confidence, and you'll be fine.
That's right. Theses. And so we really went into it. Two different thesis. One was, hey, we think this market is wildly underserved, and two, we think this market needs more education, just about how institutional capital markets work, and really kind of applying those same principles and deploying the same type of process here in what we would consider, kind of touching a little bit of Main Street or lower middle market. And the way we would define that are businesses running and ranging between 5 to 7 all the way up to 50 or $60 million worth of revenue. And when we first started, it was much lower than that because, we met the market where they were, criteria for us in terms of SDE or cash flow or EBITDA, however you want to, call out that measurement, was around the, $200,000 to $500,000 range at the low end. And what we discovered was that our process in particular, it was a better fit for the larger businesses. We discovered that fairly quickly. But we still deployed our thesis into this market, which was underserved. And also, this market deserves it just deserves a better process. It deserves better education on how they can optimize their exit. How can they optimize their sale, the sale of their best and greatest asset? So here we are today.
Yeah. And that's where I think just time is the issue, right? It's still, and a lot of people see it as depends who you talk to. Someone that is purely an Amazon seller might see this as a very mature market because they're making millions of dollars, right? Or just have a cash flow of $1 million, $2 million, $3 million, something that they might not have ever seen in their life before. Whereas someone that comes from the investment banking side might see it as, hey, there's no education. Some of these Amazon sellers aren't running it as a real business. So what are some of those differences that you see, I guess, between the more traditional market that you were working with versus this online Amazon seller market?
Yeah, good question. I think there's a lot of, if you're gonna focus solely on, say, Amazon-based businesses, I think there are a lot of folks who owned companies and realized very quickly that it was growing into something much bigger than they realized and much bigger than they could really manage. That's what we've noticed. And so, they're smart. All of our clients, they're all very, very, very smart people. They just have never had the classical training inside of, say, working for a middle market consumer products company to distinguish between why a specific function and growing out that particular function is really important. And frankly speaking, I spoke to a guy yesterday, he was so honest and just said, hey man, I got this business up to 11 million. I don't know how to grow it any further. I don't know. And honestly, I don't have the bandwidth, nor do I have the motivation to even get it from 11 to 100. I just don't want to do it. And that's kind of some of the differences that you'll see. And it's a natural progression. It's a natural evolution in the growth of any company to really kind of have the founder owner get it to a specific spot. And then you really start hiring. You either start hiring in better and greater talent to take over your position. You still stay the owner and majority equity stakeholder, but you're hiring in really good people now to run it and take it from X to Y.
People with experience of doing that.
People with experience. That's exactly right. And so, yeah, that's some of the differences. I think it's just, but every business, every consumer product company starts somewhere. They all have a story. Right. Mm-hmm. If we were to go down some of the major brands, even picking on Amazon, they all have a story. We all hear about how Bezos was, with his wife in his garage, shipping product. Right. So they all start somewhere, and then it's just a natural evolution to build out every function of the company, maybe take on outside investment to do so and give up some equity. It's a very natural progression. And that's really the differences that we see, is that we're working mostly with businesses that need that next iteration. They need that next click, and they're just not interested in doing it. So they say, hey, I'm ready to put this in the hands of someone else and get paid for what I've done.
Well, and that's, so I was in, the Bay Area for a few years with Noviland, and it is a tremendously different mindset out there, right? Everyone's trying to raise from venture capital. that is the key out there. But what, a lot of them talk about, and, even just going to meetups and different events and learning about what venture capital is, what's out there,
Yeah.
and angel investing. And is that whenever you take in investments, you're also taking in the resources. You're not just taking in the money. Right. And that's where the growth can come in. That's where their network comes in. And that's where I know we've talked about this, where, someone that is in the investment banking realm versus a business broker is going to just traditionally and naturally, they're going to have different people in their network to create those network effects.
Yeah.
So I think it is also important to outline what, and maybe to me, it seems fairly simple, but like, what is a business broker versus a investment bank advisor?
Yeah, I could definitely walk through that. I mean, look, to call yourself an investment banker, you can't just wake up and say, "Oh, I'm a lawyer, I'm a fireman, I'm a police officer. Now I'm an investment banker." It comes with years and years and years and years of career experience and working in either institutional investment banks, where my partners came from, Wells Fargo, Citibank, Deutsche Bank, the Hartford, working on both the sell and buy side. I mean, my partner, Joe, he worked on the desk that effectively funded the broker dealer at Wachovia and then Wells Fargo. And to really kind of make that a simple statement, it was the thing that actually funded the entire bank. And so he was trading all types of derivatives and foreign currency and bonds and working on large M&A deals and et cetera, that the output of that was to actually fund the bank. So, you pick on that. And my partner, Jason, he worked as a managing director of capital markets for a $9 billion, I was either 9 or 11. It fluctuated. Billion
a big difference.
Yeah, to you and I, yes. But when to these guys, it's like, I don't know, 9, 11, I don't know, something
around there.
But working as a managing director in the for capital markets for it's Bayview Asset Management. It's a well-known asset management group. They did a lot of business with Western Asset Management. WAMCO, which is a very well-known name. And my partner Chris was on the team that led the LBO, the leveraged buyout of HCA in Tennessee with the Frist family. So you can't just wake up and say, I'm an investment banker. It comes with years and years and years of experience working within the capital markets and the financial markets. And so you're also classically trained to work on very complex situations, complex financial situations. And all of my partners, they've had I call it more series than a BMW lot. It's all of it, all the above, and I'm not sure how familiar you are. There's, I think it's series 7, which is your stockbroker's license. That's like the easiest one. There's several other series like
that's like you go into TD and you train for a while and then you have to take your series 7, I think, right?
That's right. And it's actually the easier one. And, the harder ones are things like all the series that go into becoming broker dealer, where you can trade really big securities. And, you have a nice little bright eye on you from the SEC and FINRA. These are not easy things to do. And they take a very, very strong, I'd call it, acumen, skill set, and even pedigree to really execute on these on these complex financial issues and problems and et cetera. So yeah, I'm trying to framework that, that isn't just anybody. You can't just wake up and just say, I'm going to do that. You and I think talked about this the other day. It's like someone waking up and saying, I am now a supply chain master. It's like when Michael Scott walked out and said, I declare bankruptcy. And Oscar had to walk in and say, hey, just because you declared it doesn't actually mean it's.
That's great. I'm glad you're an Office fan.
Oh, I've watched it. I think at this point, my wife makes fun of me. I usually watch an episode a night before I go to bed, because it's the writing on that is just unbelievable.
It's phenomenal.
Yeah, and we always joke around in the office how our clients will want us to kind of redo the financials again because maybe it didn't really show up the way they wanted to.
Yeah.
And we always give the office reference of when Michael Scott goes, "Can you crunch the numbers again?" And the guy goes,
"Just do it again, Toby."
And the guy goes, "Crunch."
Oh yeah. He just hits enter again.
Enter, and he says, "Crunch."
Did it do anything?
Yeah, that's right. Did it change anything? Yeah. So anyways, so yeah, I mean, it's and anybody listening, you can literally go to Google and type in investment banker, and you will find a slew of information around what it means to become and work within an investment banking institutional bank. I mean, I'll give you another example and then I'll move on. But the analyst class of Bank of America, my partner Jason was telling me he was part of that class. Every single person in that class, which by the way is extremely difficult to get into, every single person that he worked around was Ivy League. He was the only one that wasn't.
Oh wow!
And lots and lots of people wanted to be part of this analyst class, and he was part of a very small group that was the class of, I think it was like 96 or 95. Bank of America analyst class. It's very difficult to get into these large institutional investment banks. And I say that to make a statement that because it's not just anybody, when you have an investment banker on your team, you've got somebody with very, very strong resources, extremely strong financial chops and acumen to help you run the deal. And that's where things do get lost. So now let's contrast against a business broker. Anybody can become a business broker. Anybody. And I don't even say that in a disparaging way. It's just that there is no bar.
Like if you had a business and I knew someone that wanted to buy your business, I could broker your deal. I could call myself a business broker.
Correct. That's
okay.
Right. And in fact, there's, I don't want to get into the licensing and et cetera, but, under the SEC no action letter, you don't have to have a license. I mean, there's some states where you do, like in Florida and California, you need to have a license. But that's mainly it's a real estate license. But that's an antiquated law because we're in e-commerce. We're not selling buildings as well as we're selling assets. It's just pure assets, right? But anybody can become one. So let's just leave it right there. So when you hire an investment banker, yes, you get a wealth of resource, both from an acumen, a skill set, a pedigree. That it's a completely different process. That particular person can run you through really any place you want to go. We have a deal right now that's it's a fitness focused deal. We're having conversations with Peloton, and they're responding. And we're going back and forth. I'm not saying a business broker can't also write an email to Peloton, but what I'm saying is Peloton is going to look up who's writing me, who are they, what's their background. I don't want to waste my time. And they're more inclined to work with someone that is an investment banker versus, say, just a business broker. In fact, they probably won't even write that person back. And so, yeah, it really does unlock, I would say, a whole other level of being able to take your business to the right buyers and run just a much more sophisticated process.
And so I know you mentioned earlier that you at Global Wire typically work with larger customers. Does that tend to hold true for anyone that's in the investment bank world? I would imagine so, with all the experience that they have. And
yeah, and when you really start to kind of segment and tier out kind of investment banking, you've got really three levels. You've got lower middle market, and institutional. And to translate, lower middle market is the criteria I outlined earlier. It's about 5 million, 6 million. Every bank will kind of have different sets of ranges in terms of revenue. If you're working with true kind of consumer product companies or true companies that work on that EBITDA metric, middle market's like 100 to like typically averaging 100 million to like 500-600 million and touching upwards of $1 billion. Like Goldman Sachs announced, I think 2 years ago, that they're now moving into middle market, and they announced it and said, we're working with companies 5 to like 900 million or something, like, or 500 to $1 billion. Right. Okay. So that's middle market. And then institutional really is going to be kind of starting in that billion plus. That's the deals JP is working on, Bank of America, Wells Fargo, Jefferies. Jefferies is in Lazar's a little bit more of a middle market bank, but that's when you're starting to get those marquee, true brand names, taking you to market, where you hear about Uber just did an IPO and it was led by JP Morgan and Goldman Sachs. They're working on very, very large deals. So that's how you really tier it out. And then business brokers typically live in Main Street and are trading, are helping take Main Street deals to market. And that Main Street is typically under 1 million. And they'll go up to, 4 or 5 million. And even in our space, we'll see some that fire off at, 20, 30, 40 million. And we just shake our heads and say, it's just so highly inappropriate. A business of that complexity and that size should have and absolutely should be using an investment banking process.
And so what is the process difference? Because, to be completely frank, I have heard and I have seen a ton about brokers and online brokers that they take you to aggregators, or they take you to just other maybe larger sellers, and they'll sell your business with ease. What level of complexity does an investment banker have, or investment bank, advisor versus a broker? How do you work differently with the two?
Yeah, I'll pick on something you just said. With ease, it's not. A broker process, you're really shouldering, and the burden of getting the deal across the goal line falls on your shoulders. You don't have that. And I always say this term, and people are like, "Are you talking about the software?" But Jungle Scout and Sherpa, you just don't have that. You don't have someone who is going to really just be in front of you and quarterback the entire process when you run it through a business broker, a traditional business broker. And the reason why you and I and others have heard so much about business brokers is because, frankly speaking, there hasn't been an investment bank that's come down to this market and really worked in this market. And now you're starting to get it. And there's even folks who are calling themselves investment bankers, and I'm telling you, they're not in this space. There's just a lot of unsophisticated and a lack of education. And when you live in a world with a lack of education, you get a lot of bad information. That's what you get. And so up to this point, that's really what it's been. And so the difference is very stark. There's a very strong contrast. A business broker will engage you within 2 or 3 days. We even have clients or potential clients coming to us trying to treat us like we're business brokers, and saying, "I'm making my decision in 3 days, and then I want to go to market in 1 week." And I'm just like, "Yeah, let me send you the architecture of how that's not going to work here at all."
Yeah.
For us, for a business broker, it's quick engagement letter, very weak marketing materials. Even though there are some in the space that are trying to make them look nicer, it doesn't actually articulate the right information on what a more sophisticated buyer is wanting to dig into, and what they really want to see and learn from the company. Because when you have a really great business, and you mentioned kind of going to aggregators. I mean, honestly, we have specific businesses where we'll tell people just flat out, like, you are an aggregator type of trade, right? But what we've noticed with business brokers is they don't actually necessarily try and take it out to, on a wide effort. It's not all. This is just picking on some of the things that we've heard in terms of feedback. They'll just go to like 1 or 2. And in my opinion, I'm going, that kind of feels like Office Space. It kind of feels like when the 2 Bobs were sitting in the conference room and they said to the guy, "What do you do here?" And he said, "Well, I take the papers from sales to engineering." And they dug in on him. And then the only thing he could say is, "Well, I'm a people person." Right. So like, there's not a whole lot of work that's necessarily involved. And that really is a business broker process. They have a buyer list. They talk about the buyer list. And the reason why I'm even doing air quotes is because it's a myth. It's a massive myth. And I'll contrast here in just a moment on kind of why that's important and the differences in terms of an investment banking process. But, they list it, they put a price tag on it, and really it's kind of like Facebook Marketplace. Let's just hope people bid on it. In fact, there's even a new, you even got places like Flippa Empire Flippers does a marketplace. I think those guys are actually for staying in their lane and understanding what their target market is. They actually do it really, really well. I have a lot of respect for those guys.
What's their size for like the size of companies that would use them?
Yeah, their average is, I mean, they're sticking in Main Street. I mean, they've had a couple deals that have gone, fired off at higher, higher revenue, but for the most part, they really are just sticking to their lane. They understand their target market. And so they get it. But, anyways, with business brokers, they list it, put a price tag out there. And what I was trying to drive towards is there's other marketplaces that are trying to kind of create that same concept. And look, man, all it does, and then I'll move into investment banking process. All it really does is it tells the buyer, if you've got a really great, strong, scaling, sizable business, and you've decided to use a business broker, it's like going to court, and it's a really important reason for you to be there. And you've hired Better Call Saul versus hiring a marquee lawyer to really defend you. Or, if you're the plaintiff, really kind of make sure that you state your case, right? I mean, I use analogies because I think it's really important. And it's really this, it's the same type of analogy when you're considering selling your greatest asset and you've got something of size and scale. If I'm going to go out to the market, the last thing I want to do is signal that I don't take this process seriously, because that's what you're signaling. You're saying, I don't really take it seriously because I've decided to hire a representative that is suboptimal to this particular process. It also screams too, in some ways, not just business broker, but even for the folks who are just going direct to aggregators. It screams that you scream to the aggregator and everybody else that you're a commodity. I read an article not too long ago, you may have read the same thing, of a guy who went and basically ran his own deal. And I commend him. Congratulations.
Deals, right?
Yeah, well, he ran his own deal, his own business, and ultimately, the fund that he sold to, I just shook my head and I said, "That's you didn't end up in a great spot. You just didn't." And if we were to look at, I can guarantee you that the fund that he went to, I already know what the offer looked like, because they're very consistent in bidding, not great. And even then, it's like, there was a level of pride and hubris of, I didn't need a broker. I did it on my own. Look what I accomplished on my own. And I'm going, hey, congratulations. However, if you had a real business of size and scale and you put it through a sophisticated process, your final outcome would look a whole lot different. And the reason why I can firmly say that is because we know that happens. We know it happens with our clients. We know that going through a sophisticated process that we offer is going to index in total deal structure. This is where we start to get into some details that sellers don't fully understand yet because they haven't been through the process. The APA documentation, all the deal docs, right? The asset purchase agreement, all of that is now optimal. It's all in the benefit of the seller. And the deal structure is in the benefit of the seller. And so, quickly, Reader's Digest version, contrasting all of that to an investment banking process, we take the time to get very detailed and thorough. We put you through full due diligence prior to going to market. And then, once you're through that diligence period and we've got our marketing materials put together, which is usually a 50 to 60 page book that we know sophisticated buyers are used to viewing. And we also know the information that they want to see in particular to really do the work to create their own valuation of the business. And we create a market. So, Francois, if you came to me tomorrow and you said, hey, I've got a pet business and it's a real brand and, it's doing $20 million top line, we've got about $4 million of EBITDA, I would be able to create a very strategic list of where I would take that particular brand. And
because of who you know.
Yeah, and it's going to be a list, and actually the list are a lot of folks we have no idea who they are. We're going to meet them for the first time, but we do the work and we do the research through sophisticated tools to find out the acquisition activity within the pet space, and then we go after them. We've never talked to Peloton before, But yet here we are having a dialogue and having a conversation because they found interest in the way that we presented the company. And they also now are signaling that they want to continue to lever themselves, stronger in direct to consumer brands. Right. But we create that list, and it's, on the ground, real example, a baby products business that we just took to market. It's under LOI. It's racing towards a close. 100, and I always get the numbers wrong, but I think it was like 113 corporate strategics, just over 400 private equity funds. And then we sprinkled in a few aggregators into the mix. And that's a list we created.
That's a healthy list.
It is. And
versus a broker, at least.
Most of those people said no. But, a business broker is going to say, oh, I've got 20,000 names on my list. There's no segmentation. It's just, we have buyers. It's like, Sunday. Come on down. It's just a very different way to approach the process. And, one way gets a lot more respect from larger, more sophisticated capital than the other way. And again, you can't just wake up and say, oh, I'm an investment banker now, so you should talk to me. It's in the way that you present the company, it's in the process, but then it's also the stinking people. Right. It's the actual person running your deal. And in our investment bank, we are hiring out of very large middle market and institutional investment banks ourselves. Wells Securities, Piper Sandler, Trinity Capital. We're speaking to guys out of BMO. We're speaking to guys out of Citigroup and Barclays. The way that we continue to stack the deck internally is with guys that look a lot like us. The founding partners, and actually we're trying to find people way better than us because that's what you do as a business owner. So anyways, I digress.
Well, and everything that you described, it seems, and this is a concept that I've been trying to push, particularly in the supply chain space, but I'm glad that we're talking about it in the financial space, but it's a level of maturity, right? That the market hasn't seen. And that it seems like it needed. And so like when I talk about supply chain, for example, sometimes I tell some of the businesses that we work with, hey, this logistics issue that we're having internationally, or the raw material price increases, or you not being able to forecast appropriately. These are things that other more established businesses tend to have. And that's why factories tend to give them better prices. They tend to give them, build a relationship a little bit better with them, give them better payment terms, getting, all your specs out and everything listed for the factory to make their jobs easier, connecting with. So all these different signs of maturity as a buyer, as a business that's buying from a factory, it is different when you're working in the e-commerce space. And that's why I just wanted to bring up this. It's a very positive sign of maturity. I'm glad to see it.
It is. And I mean, we talk about this a lot. We were actually just on another podcast not long ago. And we talked about how, this space, and I think it really did start. I think the spark was the aggregator model and the venture debt that came into this space.
What does that mean? Venture debt.
Venture debt. So there's lending, and that's debt, and then there's equity, which is it's the most coveted and prized, I'd say, and most expensive piece of any kind of financial model. If I'm going to give you equity in my company, it is absolutely 100% the most valued and expensive piece that I can possibly give you, right? Versus even today's currency or debt. That's all just pure lending. And in this space right now, you've got a lot of venture debt, and really what it just signals, it's nothing abnormal. But there is a lot more debt than there is equity. And that tends to signal that, I believe in what you're doing and I'm going to lend to you, but it's going to come with a lot of stipulations versus let me now let me raise enough money to build out kind of true equity in the firm and get real stakeholders inside of this place, because the stakeholders truly believe in the concept, right? Like there's one fund called Foundry, an aggregator fund called Foundry.
We just had Kellyanne on last week.
Love her. She's fantastic.
She is fantastic.
We sold her business, by the way.
Okay.
So she utilized Global Wire to help her get a really solid trade. But Foundry is all equity. They were able to raise 100% equity, and that just brings a whole level of stronger. I don't know about sophistication, but it just brings a whole level of stakeholders to the table versus debt, where it's, hey, I'm lending you money, you better pay me back, and if you don't, I'm going to take over your company. Right. But you've got a lot of venture activity in this space right now, and even some of the funds that have raised venture debt, they're still, frankly speaking, messaging in a way that's just JV and Bush League. But you also have a lot of other folks that aren't, and really treating this entire segment of the capital markets in a way that it's immature, and these folks are helping it mature. And really what we were talking about on that podcast is we're about to see a level of this whole entire market in the next probably decade will be institutionalized. And we're already starting to feel and understand the professionalization of this market.
The suits, as some of our customers call it. they say the suits are coming in.
It's true. And, to your point, having that level of kind of sophistication and professionalization coming into this space is going to do nothing but great things. And it's going to produce a very, thriving, mature market. And by the way, it's just going to now segment the market, right? Where things felt fairly flat probably 4 years ago, 5 years ago. You're going to have some real segmenting. You're going to have breakout brands that are doing, hundreds of millions of dollars to the Amazon platform in the next 5 years. And that's going to become, a normal thing. Whereas today it's abnormal, or it's an anomaly. And 4 years ago, the amount of sellers that are doing 15, 20, 30 million plus through the platform, it's becoming more normal. And when you start to get to those levels of complexity and revenue, it does nothing but naturally evolve into a professional space, from all types of service-based companies, digital marketing companies, Amazon consulting, supply chain, logistics, customer service.
I'm excited for
financial. So everybody, all the game gets just, everything steps up, and it's going to be really good for the space.
Well, yeah, the institutional money is definitely going to, and this is a thought that I just had even last night. It's just, in the next few years, just from our conversations, just hearing about institutional money coming in and the level of profits that are going to drive innovation in the space. Again, whether that is expanding, in the institutions, bringing those brands off of just being Amazon brands, and then bringing them out to, let's say, Walmart and Target and all these other retail chains, and driving more of that consumer market. And what that's going to do to the supply chain. That's what started to blow my mind. It's like, well, right now, if we're struggling to keep up with just what we have, and we think this is, and it's phenomenal numbers. It's insanely up from 2 years ago. But once that institutional money comes in, and they start to gobble up these businesses, and they start to really, really grow them to the point where we need a ton more 3PLs. We're going to need a much larger and more sophisticated trucking industry to actually transport a lot of these consumer goods, because they are going to grow them to those sizes.
Absolutely.
And international supply chain itself, I think that's going to grow tremendously. We're talking already about expanding these brands outside of the U.S. market to international markets. They're going to help them do that through their own resources. No, it's exciting stuff. It
is exciting, and I'll tell you, you hit on a word that I think is highly interesting. It's innovation, and I think it's going to drive a lot of innovation. I mean, look, I'm going to throw out a stat that I read yesterday. It was more of like a prediction. Based on some pretty strong assumptions, but I read a report that stated in the next decade the retail, the penetration of retail sales through e-commerce is going to hit 50%. Right now it's 17. 2019 was 12. So we saw a fast forward, 12 to 17. Imagine a fast forward in a decade from 17 to 50. Everything you just said. is going to come to fruition really freaking fast.
That's what's exciting. And we're here for it.
We are. We're front row, man. Like we showed up to the concert. We showed up to the Dave Matthews concert in 1991, right? And now it's 1999, and there's a lot of people behind us. I mean, that's
right.
That's the analogy, and I think too, and even in our own business, in our investment bank, we're always thinking of ways to become highly innovative. And I mean, down to internal conversations about taking our process and developing it to become wildly innovative and almost in some sense disruptive, because it's no secret that, intermediaries across the globe, whether it's insurance, whether it's real estate, they're trying to get squeezed, right? I would say investment banks to a degree, but business brokers for sure. I mean, you've got things out there that are, like there's this new marketplace just for FBA sellers, and 100% that's trying to squeeze the broker process. You've got Flippa, you've got Shopify Exchange, you've got even Empire Flippers, who is a broker, but they've created just a really great marketplace that kind of innovates that particular intermediary, the business broker. But it's going to work itself up into the investment banking world. And we're already anticipating that. We're already thinking through, internally, where is this going to be in a decade? And if we're going to put a pin on 50%, holy crap.
Yeah.
We got to really put our heads down. We got to really think through the innovation here. But supply chain, logistics, yeah, man. I mean, look, why are the containers right now at stinking $15,000, $18,000? What's that going to look like in the next, call it, decade, right? Where is that going to be? How can we get goods faster? How can we get them faster and more efficient than having to wait 4 stinking weeks?
Well, and that's the thing, right? A big issue with that, and I forgot who we were talking to about this, but is that we have built this entire e-commerce and Amazon supply chain around just-in-time manufacturing, right? Yeah. Around how little of capital can we invest to have the appropriate amount of inventory to sell out within X amount of weeks, and not necessarily how much can we stock up so we can expand, so we can go on to different platforms, so we could try new things. Yeah. You can't do that without having the capital. And that's where I think, where you have companies like Foundry and like yourself that can help businesses actually grow and get that capital that they need.
Well, it's true. And there's going to be more of it. Right now you've got some, I mean, look, if I were to tell you just the lending within this space, I'm only going to point you to one. That's it. That's going to change where, and let's just talk about commercial banks for a moment. They are not lending to e-commerce businesses.
They're not friendly about it. No,
they're not friendly because it's soup to them. They don't understand it, right? They're just like, I can't get my arms around not having a machine and not having a warehouse. And what's your real estate profile? And, what's the fixed assets and blah, 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 blah.
And do you think investment bankers are going to help change that?
I think so, because I think what you're going to do is, investment bankers taking at what we would consider a large Amazon seller of 20 to 80 million to market, and then selling that to, some, corporate strategic or, a middle market private equity fund. And the more that happens, and the more you're going to have banks, commercial banks, taking a look at, okay, this is now a very interesting market. It's part of the institutionalizing and professionalizing of the space. That's all it is, right? And I think in a decade, there's no way that a commercial bank can ignore how many sales are being, and how many consumer product sales are being run through e-commerce. They're just going to have to, they're going to have to come to that conclusion. I think it's going to happen sooner than later. I think lending is going to become easier because debt right now is super cheap. I mean, imagine at the super cheap stinking levels that debt is right now. Imagine if a lot of these extremely smart, innovative business owners, service providers. I talked to a guy 2 days ago, super smart guy, software developer. He's like, man, if I could get $1 million line of credit tomorrow, I would take it. I believe in what I'm doing, but no one wants to lend me money.
Right.
And I know, and you know, if you spoke to the guy, holy crap, if he got $1 million, he would create some software that was unbelievably innovative. So
is that in the e-commerce space also?
Yeah, it's in the e-commerce space. And specific, it was software that was an Amazon kind of based software, an Amazon centric software. So yeah, man, the theme here is on the horizon for Amazon businesses, and the outlook is really damn good.
Yeah, I'm really excited for it. I know we're here at the top of the hour. I know you have a visit with your mom today.
Yeah, I do.
So I don't want to take away from that.
Yeah.
And I mean, man, I really appreciate you coming on and talking about this. It's something I know we're going to have more conversations about.
Yeah. And I mean, look, anytime you want us to come on, I can bring on one of my partners, if something happens and you want to
hands down
analysis, yeah, we're here.
If they can even talk about, what their outlook on it is, I think everyone carries a different perspective. Right.
Yeah,
and I think, and I love it. I'm excited to see this grow.
Me too. I really am. It's a really good time to be involved. It's not just Amazon based business, but just digital consumer products. It's forming, it's starting to form and create its own asset class. And and we're here for it. We're really excited. So this has been awesome, man. I appreciate it. Yeah. Let's figure something out. I'll get one of my partners and let him wax poetic for an hour with you. And I think you'll really enjoy their outlook as well. So
yeah, I love it. Again, I'm excited to see the innovation, and I'm glad that you're helping drive it. And I'm glad that you guys are here for the businesses to get, the level of service that they deserve when they're exiting. Thank you again. And I'll talk to you soon, man.
All right. Thank you.
All right. Bye, guys.